Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency and other markets. What's going on here? The Donald Trump actually, with his tariffs, shake up all the financial world, not only the forex market, but the stocks, bonds, commodities, and all across the board. And actually, investors are still stunned with this recent decision. But we should understand that the key to understanding of all this problem is the actually trade deficit in the United States. You could impose the tariffs when you have the positive trade balance. In this case, indeed, you could expect a rising of the income from the tariffs. But when you have because you have self-sufficient economy, you are selling what you do not need, actually, which means that export is greater than import. But in the case of the United States, it's quite a different story. When you have the $1 trillion on a trade deficit, it means that people need to consume goods that you do not produce, or they're too expensive or something. And when you're raising tax on these import goods that investors are consuming, it means that they will pay more, which means immediately inflation pressure. Second, they will buy less, which means the drop of the gross domestic product and decreasing of the consumption. I wouldn't even mention the sentiment. So that's particularly Donald Trump is doing. Everybody currently start running into the United States treasuries, but let's take a look. Take a look at the chart. Our hand shoulders pattern on the treasuries is working just perfect. We talked about this last week. This was market still around the right arm, so it will be hand shoulders. Be prepared for a collapse. Once the tariffs have been imposed, you can see what has happened. Now yield is even below the 4%. Investors are running to the safe haven, suggesting that it's a really good idea. But in reality, the United States bonds currently is the most toxic asset that exists on the United States market, because you probably could get the guarantees to get back your nominal value, but this nominal cash will be absolutely of the different amount, a different value, because you will get the devalued money. So the 3.7% that you could potentially get doesn't include the inflation that may be 5%. And taking it all together, not everybody understands yet what's going on here, and they just following the rules that were studied in the universities and was written in the books on economics. Safe haven assets, United States Treasury. If something happens, just buy treasuries and become. So it doesn't work anymore. And treasuries currently, it's absolutely not attractive asset. But it makes impact currently on the performance. So you can see treasuries are falling. And we expect that this will keep going further to the 3.7%. It's target of the hand shoulders here. On the dollar index, you also could see what's happened. Here I will show you a bit larger time frames chart. This is weekly. And you could see that market actually is going to the 100 level, because other levels already have been broken on lower time frames. Market currently slightly oversold. On the daily chart, that's why we have the pause here. Maybe it's also reasons by payrolls that were released today. But in general, between the 100 and current level, there's no other barriers. If we transpose this to the euro, it will be around 112. So 100 is approximately 112 on the euro currency. And market actually is going there. That's what we have. So it means that downside trend on yields means weakness on the United States dollar, and correspondingly this looks supportive for the euro, whatever actually European Central Bank has decided with the rate. Still, for today's session, I suppose that more chances that we could get some sideways action or even the pullback, because the upward direction that we discussed yesterday has worked, and market even has completed more extended target of the butterfly. So here's our butterfly. We talked about first 111 area, but 109.90. This was 127 extension right here. 111 was the next one, and you can see on the recent action market hits to 111. So butterfly mostly completed, and we have the pullback here. Also, we have the overbought on the daily chart, and take a look, market is flirting with the yearly pivot resistance one. So this is relatively significant area. From the pivot point framework, it means that if market breaks the pivot resistance one to the upside, and somewhere in the future by the end of the year close above it, it means that this action that we have here, it's not just a retracement of the long-term downside trend. This is new bullish long-term trend. If euro currency will not break the yearly pivot resistance one and just stop here, start turning down close below it by the end of the year, it means that this is just a retracement with a long-term tendency. This is how pivots works. And currently, as you can see, very decisive moment, what we get. But at the same time, 112 is rock hard resistance, and as we said many times now, weekly reports, so 111, 112, it probably will be a long-term barrier for the euro currency. We will see. Meantime, currently it seems that we're getting the pullback. On the hourly chart, you could see that two levels to consider. First level already has been completed. This is the OP agreement with the 119.86 FIB support. Next will be XOP, around 108.90. It's agreement with the 618 support target. Well, in current circumstances, with this performance, maybe it makes sense trying to catch the XOP by the few reasons. First is we have the payrolls. It also could bring some surprise. Second, downside action here is relatively strong, so it's relatively fast, not just gradual. And finally, on the daily chart, market stands at overbought. So this combination of the factors tells that, well, maybe it's not really a bad idea trying to wait and see what will happen. So maybe, if not the 618, but maybe the 50% support somewhere around 109.35, it also might be reached. So that in towards what we have on the euro. But potentially, by taking a look at the dollar and 10-year bonds, it seems that in a longer term period, I mean, in the weekly chart, for example, in respect from the 2-3 weeks, it seems that euro currency should try to test the 112 resistance. So it seems like so right now.